So the yen's plunging against the dollar after Japan intervened in the currency markets for the first time in 6 years. Let's get the details. Here's Mike in Tokyo. Hi, Mike.
Hi, Mark. Well, the yen continuing to fall. We've had about a 2.5% drop since news came out of the intervention. However, putting that in context, we're only down to the same levels we were at September the 3rd. Now, the finance minister, Yoshihiko Noda, says Japan intervened on its own. It did contact other countries, but it was unilateral. It wanted to weaken the yen from a 15-year high, 82.88 to the dollar. The government says it considers 82 to be the defense line.
We conducted intervention to contain excessive movements in the currency market. We will continue to watch developments in the market carefully, and we will take bold actions, including further intervention if necessary.
The move immediately sent the Japanese currency 1.4% lower against the dollar. It extended another percentage point as more details emerged. The Bank of Japan governor, Masaki Shirakawa, saying he hopes that this intervention is going to stabilize the forex market. He says the bank will continue providing liquidity and it'll watch for signs of downside risk. Now, this comes a day after Naoto Kan won re-election as head of the ruling party, continuing as the prime minister. After that result, the yen actually rose. There were expectations he was less likely to intervene than Ichiro Ozawa, the contender, although Kan had promised decisive action, Mark, and now the finance ministry has taken that action.
Mike, has there been any reaction from other governments?
Well, Bloomberg News contacted a Treasury spokesman in the States, but she declined to comment. Tim Geithner last week telling Bloomberg that Japan has its own problems, but he didn't think that intervention was the way forward. We heard earlier this month from the finance minister, Noda, saying that he didn't think Japan could actually achieve much without the support of the US and Europe, and he wasn't commenting today on how foreign authorities reacted when the finance ministry contacted them about this. In the past, if you remember, the US threatened to brand China a currency manipulator for keeping its currency artificially low. So we're in an interesting time in terms of that because the yuan is strengthening now. A bit of history. Japan last intervening in 2004, the yen 109 to the dollar. The BOJ selling 15 trillion yen in 3 months. That didn't work. The yen rose above 103 to the dollar by the end of the year. Japan last buying the currency in 98. The yen then plunging to 148 mark.
Mike, thanks a lot. More